Among the top banks in the Philippines, BPI under Ayala Corporation remains an attractive stock market bet, as it remains profitable and enjoys loan growth. According to a study from Maybank International Banking Group, the following are the strengths of BPI. And to quote from Maybank IBG. Number 1. It is the second largest listed bank in the country in terms of asset size. Number 2. Known for its prudent cost management and strong IT infrastructure. Number 3. BPI has among the lowest cost-to-income ratios in the industry. Digital banking will also drive higher fees. Number 4. BPI targets to strengthen its market position through cross-selling products, like insurance products, and services to its largely untapped depositor base. Number 5. BPI is boosting fee-based income by growing assets under management, and its investment banking by leveraging on its existing deposit and loan customer base. In 2025, BPI recorded that its net income increased by 7% to 66.6 billion pesos, which is in line with the consensus estimates of Maybank IBG. The investment bank said that the growth of BPI's income was driven by bigger interest income. However, this was offset partially by higher provisions due to larger exposure to higher-yielding assets in the consumer segment. In 2025, BPI saw its loan growth hit 14.7% year-on-year, driven by the consumer and non-institutional segment. The key drivers for consumer loans were mortgage, up 16%, credit cards, up 32%, autos or cars, up 23%, and small and medium enterprises, up 80%. Meanwhile, BPI recorded an increase of 10% in institutional loans. With those findings, Maybank IBG said that BPI remains attractive given its consistent loan growth, driven by a solid consumer portfolio. The investment bank also identified the following as the upside swing factors for BPI. Strong demand from corporates for loans due to delayed capital spending from companies in the prior years. Cross-selling of products and services, combined with new digital products, can deliver high income fees. Elevated rates can result in better net income margins. Better capital environments can improve BPI's investment banking division. BPI is also realizing cost savings from its ongoing branch rationalization initiative. Meanwhile, Maybank IBG identified the following as the downside swing factors for BPI. Intense competition in the corporate and consumer lending business, which can affect net income margins. BPI may also incur higher than expected costs to retain depositors. Faster than expected bad loans growth that will most likely come from an increase in consumer and personal loans. Now for our conclusion, why investing in BPI shares may be an excellent decision. Maybank IBG recommends acquiring BPI shares, as it sees a potential upside in its price movement, or to 162 pesos per share in the next 12 months. This is a 38% increase over the 117.10 pesos closing price of BPI shares on February 13 this year. Meanwhile, the highest closing price of BPI shares was on November 14 at 99 pesos, while the highest close was in May last year at 144.90 pesos per share. The next few weeks may be the best time to acquire shares of industry leaders like BPI, as the Philippine Stock Exchange Index is hovering mostly below 6,500 points in the past 2 months. This means that like many other shares at the Philippine Stock Exchange, there are those that can be considered bargains or below market value, such as BPI.